Hello everyone, welcome to the weekly newsletter, Echelon 1. Let's dig right into it. So we're going to start with the S&P 500. We're going to start with ES, the futures. Starting on a daily, I can see a base drop right here with a top side of 34.83, which we are coming into. I don't know if we're going to reject or not, but it's definitely a level to mark. Over here at 3400 flat is kind of the retest of the breakout, should we even go down that far. And over here is another level that I would watch at 34.45, which is an RBR that you can find on the hourly. If we switch from the daily, so I'm going to keep this line just as a line in the sand, as a, so to speak, macro above, below, but for now we are well above that. And just look at this show of strength these 3 days. This is a complete bullish reversal from this down day that we had, so there's definitely strength on the upside even should we pull back, and this is kind of the line to where if we pull back to there, it's healthy, so to speak. We can still hold longs. Switching on the hourly, there's a lot of demand printed on the hourly, so there's a base rally right here. This is kind of a formation. Then this whole thing is a formation as well, base rally. You see the impulsive candle here. This is an hourly candle that went from 34.56 all the way to 34.72, and that's just in 1 hour. So this is definitely an RBR formation. Then interestingly, there's little demands hidden in between there as well. There's like this 34.40 right here with a bottom end at 34.30. So basically, it's really hard to look at this and say it's a short. It isn't. We might get a pullback, but it's definitely not a short. If we get under here, test, and we can't get over, then definitely on the macro stage it could be a short. For now, there is a lot of strength in this market. Still, so to speak, undecided to a degree. I'm not gonna say that it's this market is completely undecided, but to a degree it is. I mean, overall, if you look at this, we're just back to where we started in this chop. Close to all-time highs, yes, but there's nothing to say that we can't just continue this chop up, down, without even touching these levels up here. SPY calls are all shorted / sold above 348, whilst this 351 to 345 puts are long for next week. Everything below 345 on SPY is shorted as well, so that kind of makes us think that this level is going to hold. This 3440, 3430 level on a pullback, we would anticipate that this would hold. If this breaks, then the narrative changes, but for now, this is what we're going to look at. Moving on from there, tech was kind of weak all week, but then at the end, on Friday, we had a crazy surprise. I mean, Amazon just went. Microsoft as well, but mainly Amazon just went ballistic. There's calls long all the way up to 297 on QQQ, which is odd. Here, we'll just switch to QQQ so you can see where it is. So there's a 12-point rally that they're kind of maybe possibly pricing in on QQQ. We don't know if it's going to hit. They're really odd calls, but it's just something to keep in mind. And I mean, as Amazon is gearing up for Prime Day, Microsoft was squeezing. Apple still has room to run potentially to 120. So this is something that we are going to keep in mind as we go forward. As far as NQ goes, this right here would be kind of the retouch of the breakout. This is right here what we would be looking for on a pullback, because you see this is where it was hitting a snag. 1, 2, 3, 4, 5, 6 times it couldn't break out. Finally it's breaking out. So if you retest here and holds, then this is a possible play for a new all-time high. If we get a pullback in here and the pullback holds, this would be a play for all-time high. For now, very much focused on Amazon, Apple, see how they're going to do, Microsoft as well. with Prime Day coming along, that's everybody already knows about that. There's an RBR here on the hourly that you can keep an eye on. So if it pulls back down to here and holds, this is a long to break the previous high. But we'll basically see how the futures trade on Sunday before we make any robust decisions on anything. I mean, because it is coming right here into this daily drop, base drop. You see this? This is the drop, this is the base, and this is another drop. So it's definitely coming into a drop, base, drop formation, into a supply. If it can get over here, then yes, definitely this is a play for a new all-time high potentially. And after this, we're going to move to IWM or RTY, Russell Futures. This is what we've been saying is going to show strength the most, and that's exactly what happened for the past couple of weeks. There is a possibility of a pullback on Russell, and you see this RBR right here. It lines up with the breakout. So this was the breakout on IWM, and it made an RBR there. So this rally, base rally, if this holds, this is going to be a great play from here on out to all-time high. There is also another RBR right here that it could be tested, but the thing is, this was tested once already. You see rally, base, rally, rallied again, tested it right here, and buyers exploded it from there. So that's kind of what this level means right here. This is another RBR where when it gets pushed down into here, if it holds, buyers are going to absolutely explode this to new all-time high. Calls above 164 on IWM have been shorted, while puts down to 160 are long, and that would make sense if it does come to fruition, because when we switch to IWM, that is where the daily RBR would be concentrated right here, 157 to 160. So if we get those levels and it holds, it would be a good play to a new all-time high. Moving on further along, we have Ulta. So on Ulta, our analyst called 230 puts on Friday, minutes before it took a $3 drop for a 75% trade. Option flow is showing a drop potentially to 190 by October 16. Now, potentially, we know how to play option flow. If this, then that. With that being said, if somehow Ulta breaks out, it could retest 237 again, but 235 calls a short it, indicating the run could be over from the past couple of weeks. Now we are going to switch to an hourly chart here. What we do see here is a very obvious drop, base drop right here. I'll switch to 2 hours so you can see the formation a little better. So here it is. Anything below this is bearish on Ulta. So if it can't reclaim these levels, these 237 and 239, if it fails to reclaim this is a short. Target one is 230 right here. I do see a very, very interesting rally, base rally here on the 218 level right here. So this is a very interesting 2 hour rally, base rally. It has not been tapped. I mean, we can maybe consider this a tap, but still, if this ends up into a higher low, if this holds, then this could be a nice scalp for a retest. For now, just pay attention to the supply, demand here as well, and of course there is this trend here that needs to be broken. Remember, these trend lines are not exact science. We're just indicating that there's a trend here, and if the trend breaks down, then we are going to see levels below. Moving on from that, we got Amazon. So crazy strength on Amazon on Friday. So anticipation is that the run is not over. That's just general anticipation. Amazon can easily run to 3,400, 3,500 if the market stays bullish. I mean, market makers are long 3,400 to 3,600 calls. Yep, 3,400 to 3,600. However, on the flip side, 3,215 puts are long. So there could be a slight pullback before a ramp up. And of course, we have this rally, base, rally right here. This is also a base down here, but God knows if it's ever going to come to that. Below, there is an RBR right here on 3160, but rather than going that far, concentration is going to be on this level. This rally, base rally right here, this level. I mean, give or take a few points. Amazon is a $3,300 stock, so you got to give it a plus minus 5 points or so to let it work its magic. But should this hold on a pullback, I mean, it could keep going, of course, but should this hold on a pullback, then the possibility and the reality of the possibility of 3,500, 3,600 hitting is very real. So that's another trade to keep in mind. Further on, we go to Wynn. Casinos have been getting hit ever since COVID started, and Wynn is down big time. With earnings seasons coming up and Wynn on November 4th, this could push up and start a run, an earnings run. Market makers have an oddball 77 call long for October 16 and 80 calls long for October 23. This could be a cheap wager for a potential 2 to 3 times trade. 73 calls are currently, let's see. So if we would consider this a lotto, but for an example, 80 calls for October 23rd are only 80 to 90 cents a piece. Now, if we go into the technical side of things, quite obviously, there is a base drop right here at the 73.374 level right here. So there we go. If it gets above this and holds, then that possibility of 80 kind of becomes very real. Might not even go that far, but it's a good target, because that would mean it would be broken out from here. So this is the big level in our mind. This is the big level to keep in mind. I mean, this is right here. You see it has failed to break out multiple times. So with that being said, if it isn't a rally base rally here, so just want to point that out. This is a rally base rally. If from here somehow Wynn gets over and it holds here, then it's a very good play to 77 and 80 beyond that. So if it shows strength and it holds here, this is a very nice play to keep in mind. So throw it on your watch list. And from there, we're going to move on to Google. One of our analysts called Google 1440 on Monday, and so obviously it went way beyond that. Looking at it on the hourly, so if you switch on the 2 hour, you're going to see it much more clear right here. Google 1501 with a downside of 14.99. There is a hourly rally base rally. Should it pull back here and hold, this is going to be a nice long. Do keep in mind there are demands below. This right here, rally base rally, and this right here, rally base rally. However, I mean, bar apocalyptic news or something, don't really expect 1460 to get hit. If this demand holds, this is going to be a nice long further on. Do remember the Q3 earnings are creeping up, and they're creeping up fast. Doesn't mean that every ticker has to run for earnings, but do keep it in the back of your mind that more oftentimes than not, there is an earnings run, and Q3 is coming up. So mark your levels, be ready. Perhaps even swings can work in this kangaroo market at this time with Q3 earnings coming up. So do keep these levels in mind on Google. 1500, let's say 1500 flat, plus minus 2 points. Then you have this RBR right here and this rally base rally right here. So 1 level, 2 levels, 3 levels, with the most important one being the 1500 one. And last but not least, we have CAT. So industrials have been performing well consistently, even during the market dumps over the past few months. Obviously, CAT has a bullish pattern. I mean, look, it doesn't, we don't even have to make any lines to see that this has been going up consistently. With that being said, earnings are October 27 on CAT, and an odd bullish bet was made on CAT, reclaiming all-time highs, if not setting new ones, with October 30th 172.5 calls long and completely sweeping the open interest with $200,000 invested. Is that gonna happen? Who knows? But there are earnings coming up, and as we know, with earnings, anything is possible. But rather than the earnings themselves, more interesting to us, obviously, is the earnings run. This right here is the breakout. So coinciding with a rally base rally right here, this is another ticker to have on your watch list. Obviously, there's a little bit of a gap here. Then you have an RBR right here as well, but we would like to see this breakout hold. So either here or here, doesn't matter. We would like to see this breakout hold. At worst, the gap gets filled at 157, but yeah, that's as far as we would like to see CAT retrace to in order to place a bullish bet. And this is another good one to throw on your watch list, because as you can see, it has respected every demand it has made on its move up. You see there's a rally base, you see this base, rally here, pull back into it, buyers stepped up, pushed it up, it's broken out. So now it's to see if this breakout is going to hold or not. And last but not least, we're going to discuss 2 trades that are ongoing. This is the Facebook trade that we got into on Friday. So on Friday, when Facebook hit right here, we went long for October 23rd. And the reason why is because this is an hourly rally, base rally. Came into here, this is where we got in, so 262.5 level is where we got in. Dipped a little further than that, sure, but this is still looking bullish. Only thing concerning about this is that it's a lower high below this 265 high. However, if it breaks out from here and it holds this 265 level, so we are long for 270. If it breaks out here and holds this 265 level, feel free to average up on the calls. No averaging down, averaging up. If it breaks out of here, 265 holds, average up, 270, average up, as you know, 280, and then 280 is the first price target, 300 is the second price target. There are earnings coming up on Facebook as well. There is a demand here down at 260. So on the downside, do expect that a possibility of 260 being retested is very real. But we'll play that if it happens. And that's about it. So on the daily, you can just draw a line right here, and if it holds above this level right here, 265, average up. If it holds above 270 right here, average up, and 280 right here. So this whereabouts right here is the first target, and the second target is of course 300. So we'll see what happens. And the second ongoing trade that we have is AMD. AMD 90 calls for November. Now the reasoning behind the trade, here we go. The reasoning behind the trade is of course here. So this is a rally base rally. As soon as it came back into the rally base rally, this was our entry right here. So rally base rally, enter on the base. Stop loss is going to be down here. Over here at 83.9. there is a supply. So do keep in mind that this is a drop-based drop. We want to see it above this. If it shows enough strength that it gets above this and holds on the back test, this is the level to average up. Also, could be a profit-taking level. If you do not want to stay in a trade for so long, this is a profit-taking level. So over here, perhaps take some profit. If it comes back and holds, average up. Remember, averaging up, not down. Average up. If it goes down, we cut. Average up. And then if it holds at 83.9, let's just call it 84 level, this is target number 1 right here, target number 2 right here, and then of course we go to 90. So again, keep in mind, these are ongoing trades. We're going to manage them as they go, and throw every other one that we went over in your watch list, and we will see you in the server on Monday. Thank you very much.